Hi guys, this is Katie Brunshoten with Certum Solutions in North Carolina, and today we're going to talk about the balance sheet. What is it? What does it do? How do we use it for our business? I get this question a lot, especially when you have a business owner that has relied on the profit and loss for a while, and they may not know how it ties into the balance sheet and how that helps. To me, I find it best to think of it as like a net worth of your business. What are my assets and my liabilities? How does that equate to what I've built? And how does that look? Okay. Before we get started, I'm going to jump over here into my quick Evernote note, and I'm going to bring up an equation that a lot of us may not be familiar with, but this is one of the central pillars of accounting, and it's assets equals liabilities plus equity. If you start an accounting class in college, basically the first day you're going to see this. It's basically just an algebraic equation, and if you want to bring history into it, I know Leah is really good at bringing these really interesting historical stories into her videos. It goes all the way back to when accounting was formed. Assets equals liabilities plus equity. I'm saying that for all of us. Get that memorized before we go on to the next step. One more time for the group. Assets equals liabilities plus equity. So now we're going to see how this balanced equation balances on our balance sheet. And we'll come back to retained earnings in a little bit. We're in our Odoo homepage, and in order to get to our balance sheet, we want to go ahead and click on the accounting module. And within the accounting module, you'll want to go to reporting, and then you'll want to go to your balance sheet, and that is right here. You'll notice this is a demo account, so there's not a whole lot of activity in here, okay? Our liabilities and our equity are about $4,800. This is not most businesses. The other thing I'll bring up, you can change the date period. Depending on whether you keep books on an accrual or a cash basis, you can also change that. And so this one right here is as of 5/15. More typical, you will see people doing it through last month, or you'll see it for last year. Usually it's a previous period because you need time to close those books. So right now this would kind of be a draft. When you're looking at your balance sheet, it starts out with your assets, and more importantly, it starts out with your very liquid assets. It goes from your most liquid assets down to your least liquid assets. So your bank account, your cash on hand, your cash drawer, those kind of things are going to be up here at the top. Account receivables. So things that, payments you're expecting to receive, but you don't have in your hands. You don't have that very important constructive receipt like we talk about in one of my other videos. You don't have that yet. As you work down the line, you see other current assets. You see prepayments. I've prepaid for something, but haven't gotten the value of that yet. So it's kind of like a deposit on something. Then you have your fixed assets and other non-current assets. And for that, you're going to see typically down here your PP&E or property, plant, and equipment, maybe your buildings, things like that. That's where you're going to technically see your accumulated depreciation. In accounting, we talk about current and non-current assets. As current assets, I'm using them up within the next 12 months. Non-current assets, those are ones where I won't use them up for after 12 months. That's kind of like your buildings, things like that. Liabilities are much like assets. They are just the other side of the coin. So what liabilities do I have? I have deposits customers have paid me that I have not given them the value of their service yet. So that would be there. And then you have non-current liabilities. Again, coming back to this whole current, non-current thing. Is it less than 12 months or is it more than 12 months? Okay. One more thing I'll touch on before we get to the ever important equity piece, which can arguably be the most important, but also most neglected piece of your financials. You have your numbering here. So if you have a certain way that you want to number your accounts, I have another video on the channel about how to number accounts. There is a specific nomenclature that most people use that again goes back a while. And so you'll use this naming system as you name your different accounts. And you'll notice, say your assets are starting with ones and your liabilities are starting with twos. There's actually a system behind that. Now let's jump down to your equity. With your equity, it's made up of a few different parts. And depending on how complicated your business is, it can be made up of several parts. For today, we're going to keep it extremely simple. We have unallocated earnings or net income. That's coming over from your profit and loss statement statement, which is what we call a temporary statement. We'll get to that more later. Then we have retained earnings, which brings me to my really silly way of remembering this, but it works for me because I do retain water sometimes. TMI, I know. Retained earnings. I think of it like we retain water sometimes. I had too much salt today. I'm retaining water. That's earnings that you have not done anything with. I don't know what I'm doing with this money yet. So right now it's sitting in this little box. Once we decide what we're doing with this money, if we're distributing it or what have you, then it will move out of the retained earnings. The equity section is a section of your balance sheet, which I strongly encourage accounting professionals to be used for, or if you know your books and your accounting pretty well, you have maybe some college courses or some classes, or you've been working in accounting, you know how this works, because it can be really tricky, but it has some consequences if you goof it up. So within unallocated earnings, you have your current year and you have previous years unallocated earnings, and then you have retained earnings, same thing, current year, previous years. And in QuickBooks, we have it as, here's my net income, here's my retained earnings. The net income pulls from, this is where it's coming in, the big moment, your profit and loss, that temporary statement. When your profit and loss is being run for 2025, say, you're not going to see stuff from 2023. Why? Because it's what we call a temporary statement. It goes poof and resets. So the balance sheet does not reset. It holds on to everything. What's it do? One could argue you retain things, right? So all that stuff from the P&L comes into your balance sheet and then it sits here until you do something with it. Most of the time, a retained earnings account might be adjusted by something like a partner distribution, or else maybe dividends being paid to shareholders, things like that. But you're going to have a couple different sections. And this also does, in some cases, tie to your tax forms around basis calculations and other schedules. So it's really important that you try not to mess with this unless you know what you're doing. But it's also really important that you keep it up to date, because it can be a very helpful piece of information, okay? Why am I doing this video on the balance sheet today? Because there are things that people tend to maybe goof sometimes on, or they don't understand as well. And the balance sheet is a critical piece of your company structure because it helps you make some very strategic decisions. Take KPIs. There's a KPI called the return on assets, right? Well, you need to be keeping your assets accurate. So if you're running your inventory and you're buying inventory and sending it to an inventory account instead of an asset account at first until it's sold to a customer or what have you, guess what that throws off? Returned on assets. There's several KPIs that help people run businesses. And to me, bookkeeping is more than bookkeeping. It's actually data collection. You are collecting data to help you make strategic decisions for your business. Don't listen to people that say just keep books for taxes, because really your financial statements are meant for lenders and stakeholders or shareholders, really shareholders, to see what kind of portfolio they have in your business. If you're taking shortcuts because you either don't know and you don't run things through how it's supposed to be, then it's going to throw off those KPIs. And one day you're going to pop up and say, I need a bank loan, or I need to do some strategic planning, and you're not going to have a total picture of your data. I totally empathize. I am one of those people that's like, in the past, there have been times, I'm not going to pretend I'm perfect, where I was like, oh my gosh, taxes are coming up. We need to make sure the books are closed. And honestly, when you get to that point, it's too late. It's important to keep accurate books and accurate financials so you can do that higher level work and make real decisions with your business. In any case, I have kept it to around 10 minutes, which I'm pretty sure is a record for me. Before we close, I want to bring you over to the profit and loss to kind of bring this full circle. Do you notice this number, the almost $4,800, which it's almost like they just threw it off with a couple pennies, so it wouldn't be even $4,800, and how that is our net profit? Remember where we found that? We found it on our balance sheet under our equity. So right here under unallocated earnings. I brought it full circle. I told you I would. If you have questions about this video, if you have questions about what we can do for you here at Certum Solutions, if you have questions about any of this, we are 100% here for you. Leave us a comment, email us, or get in touch, and we are super excited to work together. I hope you have a wonderful day, and thank you again for watching.